Hello, it's Jen, and welcome back to Nguyening Lifestyles, where today I'll be telling you what the different order types are. Okay, so you're at that page where you want to buy and sell a stock, and you got everything filled out, but there's just one problem. What the heck are order types? Well, don't worry fam, I got you. There's a bunch of different order types, but let's start with market order. Now with market order, you buy or sell immediately at the current price. When you buy a stock, you're probably going to pay at or near the current posted ask, and when you sell a stock, you're probably going to sell it at or near the current posted bid. But here's the most important thing you have to know about market orders. They don't guarantee the price you're looking at. So if you're placing an order on a really volatile company, say Apple or Tesla, and the price was a great low of $100 compared to its usual high of $130, you see it at $100, but you're too slow to hit submit, and the price shot up to $110 the second you clicked buy. Oof, you missed your chance. Market orders aren't all that bad if you want your order to go through. Say you wanted to sell your shares of Credit Suisse X Links, ticker symbol SLVO, and you don't mind gaining or losing that penny difference. SLVO is less volatile and it's not going to move that much. So you just hit submit and you sold everything. Good riddance. Okay, so next up is limit order. Basically, when you set a limit order, you're setting it at a price in which you hope it either rises or falls to for the future. It's a way of trading without having to glue your eyes to the market. Just set it and let it go. The only caveat to this is when you set a limit order, it'll only fill if it is at or past that limit order. So let's say Microsoft was at $210 and you saw it dropping. So you set a limit order for $208. If Microsoft never goes down to exactly $208 or less, you're never gonna get any shares of Microsoft. It won't fill even at $210 and 1 penny. That one measly penny. If you couldn't tell, this happened to me twice with the same stock. Alright, the next few are a little more advanced, so I'm gonna briefly go over them. This is where you want to do more research to see which order type you want to fill, because we here at Nguyening Lifestyles are not financial service advisors. I'm majoring in chemistry, so the most I can tell you is that polar, which is water, and non-polar, which is oil, do not mix. Okay, first is stop order, also known as stop loss. It's mostly used by day traders and mostly used when selling stocks, unless you want to short the market. Then you buy stop order. But basically, when you set a stop order to sell, if your stock drops below that price you set it at, it'll sell at market order. So let's say you have a share of ARKG worth $85. You're afraid it'll go down, and to minimize any potential loss, you place a stop order to sell at $84.50. If ARKG dips down to $84.50 or lower, your stop order sells at market order. If it doesn't dip to $84.50, then obviously nothing really happens. Next is stop limit orders. It's like a combo of stop order and limit order. So like stop order, if your stock price drops below whatever you set it at, instead of selling at market order, you won't sell past whatever limit order you set it at. So back to ARKG. Your share of ARKG was at $95 this time. You'll sell it if its price falls to $90, but you won't sell for anything less than $85. So you set your stop price at $90 and a limit price at $85. Once the price drops to $90 or lower, your stop limit will trigger and it'll sell at or above your $85. And the last order type you're gonna see, probably, is trailing orders. It's literally just like stop orders and stop limit orders, except you're trailing the price. You're following it to minimize your loss. So let's say you have Coke worth $45 and right now the price is at $50. You may place a trailing stop order to sell at $2 below market price. So if Coke drops to $48, the trailing stop order will trigger and you'll sell your share at market order. But if the price increases to $52, then your trailing stop order trigger will increase to $50. Now, your trailing stop orders don't have to be set based on the dollar amount. You can set it based on percentages too, but it's always relative to the market price. And that's it, folks. Those are the different order types. Now, if you found this video helpful or just enjoy listening to me talk, please smash that like button, hit subscribe, and ring that bell so you don't miss any more content from us. And as always, comment down below what videos you'd like to see next. Alrighty, see you next time.